Thanks for joining us once again. This is Greg for Teslafaninsight. We focus today on a company called Nvidia. Now, as you know, they just came out with earnings. The stock price is up 100 points after those earnings. So we were planning to do a pre-earnings, report, but the after earnings is, I guess, just as good because the company is doing so terrifically. Our focus today is that, well, the folks at Nvidia are enjoying a lot of success. There's a Peter Lynch violation that I wanted to review today as part of the analysis on them. So just a reminder, please take time to like and subscribe. Also, please join us on Patreon if you enjoy the show for ideas on investing and trading on companies, for example, like Nvidia. So the first thing I want to establish is, again, congratulations, stock's up 100 points prior to earnings. It's an amazing situation for Nvidia because, as you know, we recommended Nvidia in November when the stock was at $350 a share. It is now almost 1,100. So again, congratulations to those of you that are heavily in the stock. I think it's awesome. So the question mark is, where do we go from here? And so I actually have spent, I got to know the Nvidia site or company probably about 15 years ago. And one of the only reasons I know anything about him is because it's the founder CEO got undergrad and master's at Stanford, and his company was funded by a number of VCs. So I have had difficulty with Nvidia. My aggressiveness about recommending them has been impacted by the fact that, you know, every day, if you see a Tesla on the road, you're evaluating how the company's doing based on, is the customer happy? Is the car working properly? Is it on the side of the road? There are all these bits of information that you pick up on a constant basis when you analyze certain companies. And so my trend has been my trend, consistent with what Peter Lynch has recommended, is that you kind of don't want to look at buying anything that you don't have a working relationship with, because bad things can happen when you don't know the products well and the company well, etc. And I have to say, I know about Nvidia. I've seen them grow and grow and do very well under the CEO founder, and they still obviously are doing great, which is awesome. The problem I have with them is that if you're not able to understand who their customers are and have a working relationship with the company, it makes it hard to evaluate whether or not it's a great investment based on that. Now, as you know, one of the problems with evaluating Nvidia is there's something called a B2C model, which is business to consumer, and there's a B2B model, which is a business to a business. And in that case, if you see the outcomes of their products in terms of things you're doing, that you're using it, you can go, oh, there was an Nvidia chip involved. Well, in this case, interestingly, Nvidia and Tesla are, I believe, within 5 or 6 miles of each other, the headquarters. Elon has been working with them. In fact, when Elon was at ChatGPT, the first sort of major engine for the growth of Nvidia currently came from Nvidia. And so that working relationship is really solid between the two CEOs, the two companies, etc. So the thing I learned about them with all the research I've been doing, I wanted to ask you to take time to go to just type in Nvidia and Stanford, and we have several videos of the CEO at the business school, as well as in other places, discussing how we put the company together, the challenges they've had, etc. Please take time out. I'm just going to give you a couple of real quick highlights. The main thing that drove Nvidia existing as a company is when they started, the gaming consoles that you see now were selling for $1 million a copy. And so their stated goal was to create a gaming console $300 to $500, but would deliver the functionality of what had been $1 million computer. And I'm not a gaming enthusiast, so this is one of the reasons I feel like I'm at a disadvantage in terms of the command of the company. So the core logic here on this was that what really got them going was they hooked up with a company called Electronic Arts. And because of the hookup between Electronic Arts and Nvidia's graphics chips driving those video games, that was the initial successful fortune for the company. So what the CEO explained is that their number one goal is to identify products and markets, identify products they want to build, but in many cases, they're not only inventing products, but they're creating the market that they're going to be building into. So in this case, as an example that you can understand and that obviously I'm trying to understand, we're looking at the fact that the video game market didn't exist as it is now until Nvidia was able to deliver chips that could allow video games, consoles that were previously $1 million consoles to drop into 300 to 500 range. And so that's one of the dominant markets that they're in. They invented it. So their chances of success tend to be pretty good because they're porting technology into another space. Now, the other thing that the CEO talked in this case is that the AI products that they're developing, for example, drug development is one of their largest customers. I might use the drugs or have used the drugs that were developed, but not seen the relationship between how they use an Nvidia system to help design that drug. So one of the reasons why I chose the title here of is Nvidia a Peter Lynch violation? And the reason is that if you're not a professional in the drug development zone, there's a low chance that you're going to have any sort of exposure to that whole situation in between a large drug maker and Nvidia, and sort of be able to see the products in action before they get to the drug has been developed and delivered. What's interesting though, so there are all these what I call vertical markets that Nvidia is in, where they end up embedded below the obvious to support the success of those firms. So another one that comes to mind currently is the relationship between Microsoft and the PC manufacturers. Nvidia is building AI solutions on chips, et cetera, and the beneficiary of that will be a sort of a re-energization of the whole world of PCs. And so, yes, we might buy a PC, but no, we weren't obvious to the fact that those PCs are switching to the AI chips that Nvidia makes. So it's interesting because it is a Peter Lynch violation, because it's not like McDonald's. You can't go to the mall and say that company is going to do better, because instead of being in one city, it's going to expand to 50 or 100 or 1,000 or 2 million cities. And so that makes it harder to evaluate, well, how is Nvidia doing? Can they keep growing? How do you intuitively determine whether or not it's a great investment? And the issue is that somehow I really think it's worth the time to look this over carefully. The main reason is one thing that the CEO had a point about, which was he said that for the last, let's say 50 years, the computers have been primarily store something and then retrieve that information and use it in some way. Well, we're in a new realm where in a lot of different ways, it could be building software, it could be building new drugs, it could be a whole bunch of different applications. There's a way in which this is being used. And so what struck me, and you guys have to look this up to confirm I said this, one of their military customers said, look, when it comes to Nvidia, we're increasing our order by a factor of 10. So we're ordering 10 times the amount of their chips versus what we've been using. When I saw that, I thought to myself, there's something called cognitive dissonance. So a company is tripling in size their revenue on a quarterly basis, and then one of their largest customers says, I'm increasing my order by 10x. Now, what does that mean? it really could be that they need 10x more of those chips or 10 times. What it could also mean is one of the big things in the whole chip world is when there are shortages, what people will actually do is start ordering double or triple what they need because they know that the seriousness of the volume that they're buying, will click over in the brain of that company, and they'll allocate more to that company because they're anticipating better sales than expected. And then what happens is they cancel a certain portion of the orders and use what they really need. This actually does happen. I don't think it's going to be the case in the case of Nvidia. There are two problems that I see with Nvidia that are lurking, and it was articulated after earnings. Number one is there's only so much fab space to create chips that drive everything they do. And so once they've committed, and it's typically a long-term commit to the growth of their production, in this case, like this, they're in a difficult position because customers may want more, but they just can't deliver it, not because they don't want to, but because those are complex machines that require a number of chips, and you have to get in line on that fab in order to produce the chips necessary, even if you've optimistically planned the growth. So speaking of the whole idea of not getting, the impact of AI, what you'll notice on your computer is, particularly on WhatsApp, but other entities, you notice how you start typing, saying something, or it might be an email, and all of a sudden you notice you can complete the word by hitting the space bar because the machine is anticipating you saying something. And so that's kind of a use of AI. Obviously, ChatGPT is one of the most popular, and one of the most popular elements of ChatGPT is college students who have to write papers, and they just get ChatGPT, search the web, write it for them, and hand that in. And it's been a big problem for teachers in terms of how much those students are learning in the process. So I bring this up to you because you may actually already be seeing the impact of machines that do AI that are in the realm of, why Nvidia has been so successful. But these are some iterations that are easy for you to touch, or you already may be touching, but may not realize that's an AI-driven process that's going behind the scenes. So I wanted to review all these with you because the stock is up very strong. I mean, 4 times the value of the stock in only 3 months is mind-blowing. I believe that, there's no doubt, I think this thing is going to double again this year. Obviously adding another $1 trillion in market cap in the process for a whole bunch of reasons. But really what I wanted to bring up today is that I think there's a real need to allocate some time to really study how and why Nvidia is successful, because I really think that it's a huge opportunity, just like I did in November. I understand them better now, and I think it's a great investment. You might want to put some time in understanding and getting a chance to listen to what the CEO has to say. That guy is totally amazing. And this one video that's there is from the Stanford Business School. I recommend that one. And what was really fun to watch in the video is a student asked him a question about what the product pipeline looks like over time and what keeps you up at night. And he just pointed out that looking out 5 or 10 years, there's competitors, but there's a number of things that are going on as we transition into the computing future that does keep him up at night. And throughout the whole video, it really makes it clear that part of the reason he's successful is literally creating new markets that people didn't even know were out there, that people are spending huge amounts of money on. So I highly recommend you take the time out to look at this. They're heavily involved with Tesla, particularly when it comes to the chips associated with autonomous driving, et cetera, is one of their key fortes and new markets that they help create. So once again, congratulations if you took my advice in November and you've made a bunch of money. We look forward to keeping you up to speed on companies we think are powerful, that are going to do great numbers. There are other companies that work as competitors or work with them. Obviously, I recommend them as well. I just happen to know this company better than the others. because of trailing the CEO for a while. At any rate, once again, I want to thank you for joining us on our sort of highly recommend you'd spend some time climbing the learning curve on Nvidia, because I think you'll be happy with what you learn and you'll be happy with the money you make. So our final thing today is usually our health tips. Just a reminder, uh, I'm really getting into this 20-minute walk thing recommended by the psychiatrist who retired from Georgetown. Just wanted to highly recommend it to you once again. Also wanted to encourage you to don't forget your 25 leg lifts a day, and try their pre-made salad at Trader Joe's and other places that you can use. But I also want to encourage you to try out the no meat every day of the week. If you can make it there, meat 3 times a week is a recommendation that or should say, no meat 3 times a week is one of the recommendations made by one of our doctor folks. Anyway, once again, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lehitrod, hoda habezdraji, ni hao ma, kumbawa, namaste, arrivederci, hotep. Have a great day, and thanks for joining us once again.